I've spent years in the lending industry. I've worked for a lender, surveyed tens of thousands of people about borrowing and how it affects their lives, and I currently track dozens of national lenders. So I understand how personal loans work and what you should look out for. And let's be honest, it's not always easy to be a good consumer of personal loans. If you order a pair of shoes online and find that they don't fit right, or that the color is different from the picture, or that the quality is just terrible, you can just return them and you can write a review warning others. But taking a personal loan is different. You can't easily return your personal loan, and you often don't see the problem with the lender's policies until you're well into the loan. You might not even understand the true cost of borrowing until much later, or ever. One mistake that people often make when they're looking for a personal loan is to stop looking when they find someone who will approve them. A shocking number of people apply to only one lender and take the loan when offered. If you don't shop around, you can't be sure you're getting the best deal in your situation. So shop around. The more companies you can get an offer from, the more confident that you can be that you're getting the best deal you can. That's why it's not a bad idea to use a lending marketplace. Some of the most popular marketplaces include Credit Karma and NerdWallet, but we have one too. If you want to support our channel, check out ours at the Yukon project. You can apply to any one of our featured lenders and we'll check your rate with up to 40 other lenders behind the scenes. Our partners use a soft credit check, so applying won't hurt your credit. We will also show you all of your approved offers so you can pick the loan that's best for you. Another mistake that people make when they are looking for a personal loan is to look at the lender's lowest APR to determine whether borrowing from them would be a good deal. Most lenders only offer their lowest APR to the top 10% of their applicants. Top 10% would be people with credit scores above 740, have low debt to income ratios, and a substantial stable income. If you think you are in the top 10%, these lenders have the lowest APR. Most of us will have to settle for something higher, something much higher. So the more important question is, what will be the lowest APR you can get? This, of course, will depend on your credit worthiness. The following lenders could be a great option if you have good credit, decent income, and a moderate debt-to-income ratio. Of course, you should also apply to lenders for excellent credit because you could fit into their approval criteria. You should check these lenders if you have fair credit, meaning your credit score is between 620 and 680. Check these lenders if your credit score is below 620. Keep in mind that you will almost certainly end up paying much higher interest rates with these lenders. So this is the range where you need to be very critical about how much you need and whether it would be worth the cost to borrow it. Interest rate is the most significant way that a loan can cost you money, but it's not the only way. If you aren't careful, you can end up spending more money than you need to because some of the other expenses sneak up on you. One of these fees is the origination fee. These lenders do not charge an origination fee. But origination fees are a bit different than others. They aren't additive to the APR. Origination fees are included in the APR. So a loan with a high origination fee and a low APR is still a low-cost loan. If that's the case, how can origination fees cost you more than you expect? Well, in most cases, you don't get a reimbursement for the origination fee if you pay the loan off early. So if you know you are going to aggressively pay the loan off early, a high origination fee will end up costing you more than a loan with the same APR, but no origination fee. It's natural to go into a loan thinking that everything will go smoothly, but a lot of times things come up and can cause you to be late. The following lenders do not charge a late fee. If you have paid a late fee or an NSF fee on any of your bills in the last year, then the odds are much, much higher that you'll be late again in the coming year. Late fees can be one of those hidden costs that can sap your finances. A large late fee could cost you as much as the interest during a period, so they can really start to add up. Let me mention one more fee that everyone seems to talk about, and that's a prepayment penalty. Not having a prepayment penalty sounds great, right? These are the only lenders that currently charge a prepayment penalty. I'm being cheeky. Even though lenders do like to boast about not having them, I don't know any lenders that still charge prepayment penalties on personal loans. One of the most important considerations for getting a loan is getting the amount of money that you need. These lenders will all lend up to $50,000, so they routinely lend out substantial amounts of money. A reminder though, the amount that they will lend you will heavily depend on your total income and your debt to income ratio. Even if your credit score is perfect, lenders try not to lend you more money than they think you can handle. That's not just them being nice. They want to make sure that they get paid back. Sometimes you only need to cover a monthly shortfall. In that case, you are more concerned about finding someone who will lend you just a little bit of money. The following lenders have minimum loan amounts of $1,000 or less. If the best loan you can qualify for only offers higher loan amounts, you could take a higher loan and immediately make a significant principal payment when the money comes through. But you will still have a high monthly payment. That could be a great way to get out of debt quickly, but that higher monthly payment could strain your finances. In some cases, urgency is what is most important to you. If you need to get a car fixed so you don't miss any work, getting money in your account quickly can be one of the most important factors. The following lenders say that they can get money into your account on the same day as you accept the loan. Most other lenders say that you can get the money in your account as soon as the next business day. In rare cases, it can take between 3 and 7 days, but that is usually for very high loan amounts. If you've mixed your finances with your significant other, you might want to include them as a co-borrower or a cosigner. These are the lenders who will allow you to include a cosigner on your loan. A cosigner with a better credit profile than yours will strengthen your application the most. If you commingle your finances with your significant other, looking at the combined finances probably best represents your ability to repay the loan. Unfortunately, not all lenders will accept cosigners. We have done detailed reviews of all of these lenders, so if you want to deep dive into their policies, check out our reviews on our YouTube channel or at our website at theyukonproject.com. If you found this information helpful, please like this video and subscribe to our channel. Thanks for watching.